Inadequate disclosure fraud. So up till now, when we're talking about financial statement fraud, we've been talking about the financial statements, right? The income statement, the balance sheet, the cash flow statement, the actual published financial statements with line items. Well, when financial statements are published, they also have some management discussion and analysis, some footnotes that explain the statement. So these footnotes and the MD&A can have fraudulent stuff in them, right? Imagine Theranos, that lady who ran that company, and she said we're inventing a machine that can do blood tests and seconds and on site, and you don't have to wait for blood tests anymore, and just with one drop. And she would tout this and say, oh, we've tested this, oh, it's working. They didn't even have a machine at all, right? So she was lying in her statements, but it wasn't in the numbers. She wasn't lying about how many assets they had or how much cash they had or something like that. She was just lying that, oh, we are more successful in our research and development than we really are. There's not risk if you invest in us. So these can be hard. Something like that can actually be tested, right? If she says, oh, we have a machine that tests blood, you go, okay, show me the machine. Let's test some blood, right? But some other kinds of fraud are kind of tough if they've omitted something, right? Like they're being sued, and they think they're going to lose that lawsuit for millions and millions of dollars, and they just don't tell anybody about it, right? That can be tough to find out if you don't know, if you haven't looked to find out if you don't know. All right. So disclosure fraud can be misrepresentation about the company, right? Oh, we're having so much success with our new drug. The FDA is about to approve it, I'm sure. And they haven't even invented the drug yet. Misrepresentations or omissions, so things like in the management discussion and analysis, so that all those paragraphs that come before the financial statement, they call it MD&A, management discussion and analysis. And they say, oh, here are the risks. Here's what we're doing. So you can read that stuff, and they might misrepresent something. Or misrepresentations in the footnotes. So they failed to disclose related party transactions, let's say. Right? They've taken something off the books, but they still owe it. Things like that. It's like weird. So it's hard to detect inadequate disclosure. So if they haven't told something, so it's kind of like liabilities. If they haven't put a liability on the books, where do you go look for something that's missing? Same thing with something they should disclose that they haven't. Oh, we're being sued. We could lose millions of dollars. Where do you go look for that? Well, the lawyer's office. Well, the lawyer's not going to tell you anything. How do you find out that there's a lawsuit? Can you go to every court in the country and see if something's been filed? Can't do that. You could go to some obvious places to check some records, right? So it's hard to find things they've omitted. It's easier to check up on things they say, like, oh, we have this successful product we're about to launch, and people get excited about that product and invest in it. So you can find that. So how do you look for that stuff? Well, you need to look out for unrealistic growth, short history, unknown management that in the past has done disreputable things. So anything that's suspicious looking, keep an eye out for. That could be disclosure fraud. Look for things that are inconsistent between disclosures and information. So if they're saying in the information that they're hugely successful and they have this drug that they're about to launch and it's going to make millions because it cures something, well, look in their financial statements. Do they actually have costs related to that drug? Things like that. They could just be making things up. You're going to have to inquire to people about contingencies, like I talked about, the lawsuits and things, and hopefully they tell you the truth. Review their files with the SEC and regulatory agencies. So different organizations have different regulatory agencies they deal with. A pharmaceutical company might deal with the FDA a lot. You can go to the FDA and check their records. These people have a drug that you're about to approve, right? You can check that stuff. Sorry. And other types of fraud. So we've talked about the main kinds of fraud, but sometimes they do inappropriate accounting for non-monetary transactions, so barters. Some organizations do, and some of it's what we call round tripping. Your book explains it. Round tripping is I buy something from you at an inflated price, and then you turn around and buy something from me, so my revenues can look higher. Not on the financial statements, but Foreign Corrupt Practices Act is not financial statement fraud per se. It's violating a law that says you can't bribe people in other countries. Other countries, sometimes bribery is a perfectly acceptable form of doing business, but in the United States, we don't let people pay bribes. So your organization might have on their financial statement some expenses that are things like consulting fees, lawyer fees in other countries, and really what they are is bribes. So you want to look at that. Improper use of non-GAAP measures. That's our Groupon case. So look at that case. That's a non-GAAP measure they're using. Off-balance sheet arrangement, very famously Enron. Take stuff off their balance sheets, put it in a separate entity. So sometimes financial statements can tell you about some other frauds going on, so you want to keep that in mind. Well, that's it for Chapter 13.